Hello fellow traders, welcome to another episode of the series. We are trading a live account and all profits will be shared among my subscribers. Today we will give a look at Stochastic Indicator oscillator, very similar to RSI. We will analyze pros and cons and how we can use this indicator in our favor. Developed in latest 1950s by George Lane, a great technical analyst. The Stochastic checks the same thing with RSI. You can give a look at my previous video. You can check the RSI indicator, is another oscillator. It's a momentum oscillator. It measures price momentum. It remains very popular still in our days, and it also gives indication overbought and oversold signals. It uses the period of 14. It measures 14 candles, let's say. Depends on the time frame. This can be different if you are checking on hours, on 4 hours, on daily. The standard period of the indicator is 14. If you insert, if you plot him on a diagram, it will looks like this, with prices 80% and 20%. It's still in a percentage. Now there are also overbought and oversold signals. I have said that several times. There is no such a meaning in the markets. There is no something is overbought or something is oversold. It's just an expression we are using. For people who are interested in the formula, it uses the 14 days period by default. I mean, this is the standard. You can use it as you want. I mean, you can play with the values. I don't want you to remember the formula. It will automatically be in any chart. 99% of the outside in the market have this indicator. You just need to plot him on your diagram and you can automatically see him. It gives his value from 0 to 100. The signal works very easy. When the value goes to 80, it means that the asset is overbought. We open a sell order. When the values goes to 20, it means that the asset is oversold. So at this point we open a buy order. Again, we will check this indicator in action. We will open him in MT4 to see how this indicator works. Stochastic consists of two MAs. You will understand this in time that most of the indicators out there using moving average prices based on historical data. The heart of most indicator has many basic similarities. They are using moving averages of moving averages of moving averages based on previous or based on historical data. The stochastic indicator uses 2 MA. The blue one, which is the K, it's a slower one, it's a 5 MA period. And the red one is the signal, it's a much faster MA, it's with a period of 3, and it's a very easy way that you can start trading and understanding this indicator. Of course, you can also add the levels, because this is 80%, this is 20%. You can add also the 10% or the 90%. This is up to you how you want to be creative. This always depends on you, and of course there are many other changes you can do in this indicator. Because this is a simple one, you can use the exponential, the smooth, the linear weighted. You can play with the indicator to understand how this works. In this video I will give you the basics and how most traders work with this indicator. So this indicator gives based on previous prices when the asset is overbought and when the asset is oversold. When the asset is overbought, it uses like the RSI, for example. We have already analyzed him in previous videos. When the signal goes outside and the asset is overbought, then we can sell. And the opposite, when the signal goes outside, this is just a sell signal. This is the most simple technique we can use. We have analyzed that and discussed also in previous videos when we are using oscillators. In the stochastic example, the most powerful way that you can use this indicator, it's by using the divergence. This will show changes in market momentum. So we can see that even we have higher highs in the prices, the oscillator starting to showing the opposite, and the same is here. Even though that the prices goes higher, the oscillator shows lower highs. At this case, we have another example. We have analyzed it also with RSI. The stochastic and the most powerful, the most important factor, the most important component of this indicator is how to use the divergence. This also applies to the other side, to the lowers, because you will see that we have different readings between the indicator and between the price action. Remember, I have said that in many videos. I will keep saying that price action are always first, indicators are always lagging, are always coming behind, every single time. Indeed, like any other oscillator, it's very important because you can measure the momentum of the market. So this might help you making a decision easier, or if you want to use it as a signal, or if you want to use it some other price action that will help you in combine with this indicator. For example, if you see a double top, if you see a bottom, if you see any other technical chart that most likely will work. Remember, we are always taking considerations that in trading we might lose. We are just making a decision based on statistical probabilities. We just want to make profit. Now our fellow trader wants to trade. He's confident now. He understands that this is an oscillator, an MA. He have seen a couple of them. He watched our videos. He know what's a MACD, what's an RSI. She's ready to beat the market, to outperform a couple of guys that they are just gamblers, because she knows the risk reward ratio, the management, the discipline, and all these things that we are keep repeating in all of my videos. He did a small play and he's ready to rock. So let's see that in action. Our fellow trader is also very creative and very smart. She add some more levels to the indicator. In the oversold zone she add the 10% and the 90%. So now he can make his signal much more stronger, because when the prices will hit 90%, for sure it will be an overbought or an oversold signal. But let's see that in action, because here he will consider to do the buy signal. The signal goes out, the market is oversold, he's ready that he will book some profits. Indeed, the market starts to move to the opposite direction, and the market is going higher and higher. Our profit taking factor here might be triggered because the signal will going out. So our trader feels lucky, confident. He managed to get his first move. He is now in the overbought area, so at this point he might consider to take some short orders. I mean, he's already profitable, so he doesn't care so much. His account will be whipsawed at this point because the signal crosses again and again. So this is another false, another negative of this indicator, because you will get many false signals. Our trader makes another short at this point. He loses again. The market goes again up. The signal again at this point comes out. He's in the overbought area. He will trigger a sell order. He's feeling lucky because he will see that bearish candle and he think that he found the solution to his problem. But again, the market hits at 20. She have to make a decision here. I mean, since the signal hits 20 and the other indicator, the slower one, it's almost hitting 10. So probably she have to make a decision and open a buy order at this point, and he is right. Now check this point. She will still do a sell order, probably book some profits. But again, when the market will start to move into the opposite direction by doing a sell order at this point, she will be profitable and he will book some of the trades. But check now what's happened when it goes again to the oversold area. Our trader will start buying and keep buying, but the prices will not be in his favor. So this is a very clear representation of the problems of the stochastic indicator. You can use them, you can make several examples, make several tests, backtest your strategy, backtest your theory. It's good, not it's good, I mean you will see it very fast that you cannot just depend on one indicator or in one simple thing. Trading is not so simple, it's not for everyone. I have said that many times. By definition, George C. Lane says that momentum changes direction before prices do. I will agree partially with this, and I will add that in the market there are waves, there are some repetitive behaviors, and this is the most important part that we need to understand and clarify, and this is the hardest part when you are trading. I will analyze that in one of my future videos. But if we want to come into a conclusion about the stochastic indicator, it's just another oscillator. It doesn't work when the markets are trending. You will get many false signals, you will get many crosses. You need to combine that with a traditional price action setup. I will make several videos based on this sentiment, technical and fundamental analysis. So trade safe, stay tuned, and I hope I'll see you in the future.